XRP's futures market is cooling off after a summer rally. In the past month, total open interest plunged about 30%, from roughly $11 billion to $7.7 billion, as the coin's price slid from its mid-August peak of $3.66 into the high $2s. Such a drop in open interest typically signals profit-taking and reduced leverage use. Notably, a similar 65% collapse in XRPOI during Q1 2024 coincided with a 50% price pullback. On the upside, analysts point out that XRP has formed a daily fair value gap around $2.33, $2.65, marking a likely demand zone if selling continues. Crucially, this retracement has been orderly. Only about $22 million of long positions were liquidated on a recent down day and $56 million on August 14th. Far smaller than the cascading liquidations seen in overheated declines. In short, while the eyedrop warns of caution, the modest liquidation levels suggest a measured correction and the potential for a price floor to form near those $2.33, $2.65 levels. On-chain data confirm mixed signals among big XRP holders. Charts show a burst of XRP moving from whale wallets onto exchanges during the late August rally. Historically, such whale-driven exchange inflows have surfaced right before major tops, for example at $3 in 2018, $1.90 in 2021, and 90 cents in 2023, implying that some large investors may be cashing out now. At the same time, other data indicate that long-term XRP holders are accumulating at these dips on the order of $600 plus million of net buying in recent days, suggesting confidence that current levels offer value. For now, XRP is trading just under $3, about $2.90 as of late August. And analysts note that the coin must hold roughly the $2.60, $2.70 range to prevent further declines. If selling pressure eases and buyers regroup here, the cooled leverage and OI basing could indeed provide a springboard for the next rally. Large whales are playing both sides of the tape. Recent analytics show that wallets controlling 10 to 100 million XRP have quietly added about 250 million XRP over the past week, roughly $758 million at current prices. This suggests significant buying strength just above $3, which has helped absorb some selling pressure. However, a heavy supply cluster looms overhead. On-chain cost basis data reveal that the largest accumulation point sits around $3.263.29 over 1.05 billion XRP traded there. This band is capped. Every rally attempt so far. Analysts note that clearing above $3.29 could unlock fresh upside immediate targets. It'd be roughly $3.43, $3.65, and even the prior $3.84 high. But until that barrier is breached, bulls face repeated resistance and the risk of renewed pullbacks. Looking forward, the outlook hinges on key technical thresholds. If XRP can defend roughly $2.90, $2.92 as it did on August 26th, bulls will argue the consolidation is complete and a move toward the $3.70 area is next. Indeed, some analysts have set $3.70 as an upside target if this base holds. With 3.60 seen in order books by institutional buyers, by contrast, breaking below about $2.80 would likely trigger a steeper correction, opening the door toward the mid-dollar twos, and even testing the $2.60 support zone mentioned earlier. In the bigger picture, technical charts and cycle analysis remain favorably positioned. XRP's longer-term uptrend is still intact. Some models project prices above $5 by 2025 if current support levels hold. In summary, the recent 30% drop in futures open interest flags caution and reduced leverage. But it has also cleared the way for accumulation. Traders will weigh whether $2.33, $2.65, or the $2.803 range holds firm. A successful SHQ defend could set up a new bullish leg, whereas a decisive break lower would signal deeper downside risk.